Good morning. You've tuned into Buy Now, Sell Now right here on ET Now. I'm Karunya Rao. With me is Varun Hiremath, and it's earnings season that's in full swing. So let's address some earnings candidates in trade before we proceed further with the regular format of the show. Markets, meanwhile, continue to trade lackluster. Nifty down 55 points, SENSEX down 233 points. Only the small cap index holding out in trade. Let's talk about JSPL's numbers as well. It's been a good quarter if you look at the numbers as a standalone thing, because they've seen debt reduction, there's been a sharp surge in realization, there's been a rise in value-added products sales as well. Let's touch base with Mr. V.R. Sharma, the MD at JSPL, to talk more about the numbers. Let me start by asking you, of course, it's been a great set of numbers this time around, but let's look at the key segments. Long steel took a while to catch up to HRC. But now, as we see construction, realty activity pick up, do you see long steel prices go higher or stay at these elevated levels? If you could give us some foresight into that.
We have to first find the information or find the root cause of prices going up. So the biggest factor is iron ore prices. The second biggest is scrap prices. The third is pig iron, DRI and HBI prices. Actually, prices, all of these commodities, right from iron ore, pellets, DRI, HBI, pig iron, have increased substantially. So now, for the last couple of days, we are seeing that the scrap prices are going down. And maybe in times to come, the iron ore prices will also be coming down. If the iron ore prices are stable, then these prices of steel will also remain stable. If the iron ore prices, they get softened, then definitely the prices will be softened. So the impact will be definitely passed on to the consumers the moment the prices are adjusted upward or downward.
And what is the capacity utilization like at the moment?
As far as the regular status is concerned, yes, we got the regular status certificate from Indian Railway. This is helping us in participating the tenders, whether it is global or domestic. And Indian Railway is also going to get benefit out of it. And as per the Government of India's norms now, the Atmanirbhar Bharat campaign is, I'm sure the Indian Railway orders will come to JSPL and Steel Authority of India. The second point is Indian Metro Rail Services. There are 17 active metro rail projects on the table, and out of that, 5 are under implementation. So we have started getting orders from all of the metro rails, thanks to Ministry of Housing and Urban Development, because these metro rail services, they come under the Ministry of MOHUA, and they are considering us very actively in all of their projects. So finally, this status of regular supplier will bring the dividend to the company in terms of order book from Indian Railway.
Right, so this is Varun Hiremath also joining in. What about procurement from Sarda, and what's the future outlook for procurement?
Yes, you're right. There are two issues. One is our stock, which is lying in the premises of SMPL, that is Sharda Mines, and the other is buying from Sharda Mines. So we have a stock, still we have a stock of about 3 million ton, which is lying in the premises of Sharda Mines. We are bringing it on daily basis, and we are utilizing it. And the point number 2, we have a long-term buying agreement with Sharda Mines. Like other 20 more people, they have the buying arrangement with them. So we are one of the 21 customers of theirs, but we are the large customer. And we have a MOU with them, and they are supplying us this material, this iron ore fines, as well as iron ore lumps. And this will continue. Secondly, we are fortunate enough that we are located in Odisha. Government of Odisha and Odisha Mineral Corporation, OMC, they are supporting us. OMC is supplying us a substantial quantity of iron ore today. And we also buy from the private miners. And for Raigad, we source from Odisha and also from Chhattisgarh from NMDC. So by and large, the operations are stable, and we have secured the iron ore as a raw material for our future operations. There is no problem at all. And over and above, we have 3.1 million ton of capacity in Tensa mines in Odisha, which is a captive mine, and we are utilizing it fully.
Thank you for getting into detail regarding Sarda. But what about the Gwali mines? What's the update there?
Some issues of coordinates, actual versus in the drawing or the layout or map. So we request, though the total area was same, but the coordinates were not matching with the physical dimensions of the mines. So we requested government of Odisha to please correct this map and then hand it over to us. I think, and there was a timeline. We didn't take the mines in the condition as is, where is basis. So what we did, we requested them, either you correct the map or we will surrender this mine to you, and then you can re-auction it. And this option we have taken, and we have requested them to re-auction the mine with a corrected boundary and corrected coordinates.
Mr. Sharma, Gare Palma is officially yours. Have you drawn out a plan to start operations, and by when can we see it kick off?
Yeah, these mines are for JPL now, that is Jindal Power Limited, our branch. And Jindal Power is now running with a PL of about 56 to 58%. And Jindal Power has come back as a leading player today. And the moment this mine starts giving coal, then immediately Jindal Power will start its operations fully, and we may reach to about 78 to 80% PLF level. Out of a total 7 units, we are now running 5 units. So I think another 2 units can be put into operation as soon as this mine comes into operation. Now, the point here is today we are buying at least 50,000 tons of coal every day from Coal India and from other mines in the nearby area. And this Gare Palma can give us at least 4 million ton per year, which will be a great help to us. And we are planning, once the mines are handed over to us, hopefully by first week of April, then we'll take another 5 to 6 month time to make it fully operational.
Right, sir. And can we just talk about the debt situation a little bit? Of course, this quarter you've managed to cut the net debt by around 3,000 crore. Assuming operations are going to normalize from here on out, can this debt reduction trajectory continue?
You see, we opened the year, financial year 21, with 36,000 crores approximately as a debt level. We are now at 25,000 crore. We already reduced 11,000 crore in this financial year, or I would say in the COVID year. And this particular drive will continue in the next year as well. Our aim is to reach to a level of 15, 15 and 50. What is 15, 15 and 50? I'll narrate. 15,000 crore of total debt or below, 15,000 crore per year of EBITDA, and 50,000 crores per year of sales turnover. And we are heading towards that. Right. So, and we will continue reducing our debt level.
Right, sir. Thank you so much for giving us your time this morning. It was great to catch up with you and understand exactly what's happening at JSPL. That was, of course, the management. Let's take a quick glance at the markets because we didn't get a chance when we began our show today. We are at the low point of the day. That is confirmed from where we opened at around 14,700. We're down a good 80 points at 14,509. All your major headline indices are taking a bit of a breather today. The mid-cap index is down 0.6%. The banking index is a big loser today, down 1.32%. And the financial services index as well, down 1.17%. Of course, Axis Bank is leading the top losers over there. If we just look at some of the other indexes, the small cap index has also just turned negative. It was the only one holding out earlier this morning. The banking index, like I said. And then you also have the metal index today that's really not doing well. It's down nearly 2%. Even the private banks today not doing well, down 1.5%. The realty index taking it on the chin. The only green I can see on my screen as of now is the auto index. Nifty Auto is up 2.4%. Of course, Bajaj Auto is up nearly 9%. And Hero, they're all having a very good day. So we'll keep an eye out to see if Auto can maintain the momentum. We have four top leaders on the Nifty: Bajaj Auto, Hero Motor, Eicher Motor, Tata Motors. So let's see if they can hold on to the gains or if, like the rest of the market, they'll also sell off a little bit. And on that note, it's time for a quick break here. We'll be back in just a minute. Stay tuned.
Welcome back. You're still watching Buy Now, Sell Now right here on ET Now. Time to pull up our BNS and stock cloud to give you a sense of all the stocks you need to keep on your watch list. Starting with the JK Tyre, despite the overall weakness that we're witnessing in the markets, this stock is just up and away in trade. Solid set of numbers. We also had the management interact with us earlier in the day. Good commentary and good visibility they have given on future quarters as well. Cyient, 4% growth they have plugged in for the quarter gone by in constant currency terms. Margins have also shown a decent expansion QOQ. Bajaj Auto, brokerages have given it a thumbs up. The stock is one of the top gainers on the benchmark index in trade. On the flip side, you have a Biocon with a weak set of numbers and the stock continues to crack in trade. Margins have seen a 300 basis points dip as well. You also have a Bandhan Bank sulking in trade on back of result-related jitters. There's InfoEdge. Some ET report has come out saying that there's been an infusion by Ant Group and even Zomato is looking at some fund infusion. It's also being considered as a pre-IPO allotment. There's Vedanta as well. Production update given by the company last evening. The stock looking upbeat in trade. SBI Cards, Mphasis, two stocks to watch out for as far as earnings candidates go. And finally, you have Kajaria Ceramics. Jefferies has upped their target price to 900 rupees a piece, and they expect the company to continue logging in double-digit growth.
All right, as usual on BNSN, the core of our show, it's time to talk technicals and fundamentals with our experts. Kunal Botra and Vikas Sethi are with us. Good morning, gents. Thanks for taking up the time as always. Great to have you on BNSN. So, it's a bit of a different mood today, carrying forward from what we saw in the late hours of yesterday's trading session. Definitely the bears leading the movement of the market today. So perhaps there's a slight difference in your recommendations. Kunal, what are your calls for our viewers today?
So yes, Varun, this could be the second week on a trot. If we close assuming at current levels for the Nifty as well as for the Bank Nifty. For the Nifty specifically, this could be the second week on a trot where we may see some flattish kind of a closing. And for the Bank Nifty, this could be the first week after almost 4 weeks where we may see negative closing on the index. What's more intriguing is the bearish engulfing pattern which got developed in the banking index yesterday. And on the backdrop of it, you're seeing some selling pressure. But I still believe that looking at the recovery in the auto stocks, and there is still a lot of buying activity or demand which is still there for specific pockets. Now, one of the pockets which I'm eyeing on is the pharma pack from current levels, and I believe that a couple of pharma names look very attractive. These stocks have bounced back from their key moving averages as well, especially the short-term moving averages. First one, which I'm recommending, is about Aurobindo Pharma. The stock bouncing back from its 50-day moving average. I think it was at 865 or 870 approximately in the morning, and has managed to bounce back quite sharply. Now at 900-ish kind of levels, I believe Aurobindo Pharma looks attractive for at least another a dash towards that 1,000 odd mark. So this could be a interesting positional buy. Stop loss to be kept at approximately 860 mark. We'll term this as a high risk trade because of the high beta nature of the stock price. The second would be a buy on Lupin in the same breath as well. The stock forming a classic bullish flag pattern. There are a lot of supports for the stock price at this 1050, 1065 kind of a zone. So now it's come back to those support levels, and I believe that this could be interesting buy on dips kind of an approach for Lupin. So expecting the stock to move up significantly higher from current levels. A multi-month target of almost 1200 plus on Lupin, and stop loss could be kept at 1000.
Okay. Vikas, how about you? What are your picks for the day?
Yeah, actually, my picks are not for the day. They would be picks meant for long-term investors. The two stocks which I would like to recommend today, they are fundamentally very good companies, and I think the correction in the market is presenting an opportunity for long-term investors to buy into them. The first stock is Indian Energy Exchange, IEX. It's an electricity trading platform. It's India's leading electricity trading platform, where close to 95% of the total power trading of the country takes place. The company recently reported its numbers for the December quarter. They were pretty impressive. The PAT went up 40% from around 41 crores to 58 crores compared to last year's December quarter. This company has solid fundamentals. There are very good investors in the stock. Even MIT, meaning Massachusetts Institute of Technology, owns close to 2% stake in the company. I'm pretty bullish on the prospects of the company, so I would recommend a buy on the stock at the current levels of close to 238 or 240 with a target of 325 rupees in about 9 to 12 months. The second stock which I would like to recommend would be Philips Carbon Black. It's an RP Sanjeev Goenka group company, which is the leading manufacturer of carbon black in the country, which finds application in tires and rubbers, and these industries, user industries, are doing exceedingly well. We were just discussing results of JK Tire, and look at the numbers. So I'm bullish on this stock as well. It had also recently reported its numbers. Numbers were pretty impressive. Their PAT also went up around 79% year on year from 70 crores to 125 crores. The company also declared a massive dividend of rupees 7 per share, which gives a dividend yield of close to 4%. So I remain bullish on the stock from the current levels of around 195, and my targets are 275 rupees in a year.
Okay, great. Thanks for your calls, Vikas. Let's move on to our queries. Harshit Kumar of Kanpur has written to us. He had bought Imami in December at a price of 475 rupees per share. Can I stay invested for the next 6 to 12 months is his question. So Kunal, on Imami, any red flags on the chart that could possibly require someone to exit right now?
In fact, on the monthly charts, the stock at 480 odd levels is just about on the verge of giving a breakout. So I think if the stock sustains this 475, 480 zone for the next 1 or 2 weeks and closes above this could be possibly a monthly breakout for a stock like Imami. I think, if I'm not wrong, the all-time high levels for the stock was at 640, 650 levels. So if the stock provides this kind of a breakout, then I believe that eventually it could be headed back towards those kind of all-time high levels. So if you're a longer-term investor and if you have an appetite, rather time horizon, almost 1 to 2 years, then I believe you should stay invested in Imami for a target of almost 650 plus levels, provided the stock breaks past about this 480 mark on a monthly closing basis.
Okay. Vikas, what is your understanding of the fundamentals for Imami? Should one continue to stay invested?
Currently, as far as Imami is concerned, I think within the FMCG space, there are better opportunities available. My preferred picks would be Dabur or a Marico, and I think even ITC could be considered at the current levels. And since the investor has a long-term horizon, I think out of the 3 stocks which I recommend would be a better alternative to investing in Imami.
Moving on then to our query number 2, Namit Lalwani from Mumbai writes to us. He's looking at auto stocks and he's been following positive news flow that's indicating the revival and recovery in demand. He also has a tab on how management commentary has been largely optimistic. He's asking if it's too late to enter given the recent rally in most auto majors, in auto major stocks, and he wants to be invested for about a year from now. So Kunal, are there any stocks which still have more legs to grow from current levels given the way they have sort of grown in the recent past?
I think looking at the steep run, Karunya, I believe that these stocks are now entering very close to their overbought territories. Now, in a market like this, for example, today, auto stocks have done phenomenally well. But then when the market keeps on, assuming if the market keeps on going towards a downward drift, it's a matter of time that these auto stocks as well will go through a round of profit booking. So I believe that, now starting off in a big manner in the auto stocks, or trying to purchase your entire quantity would not be a better approach. In fact, a much better approach is to try and wait for those corrections to pan out into these auto names. And I think you can look at specific large cap names as well. I think even something like Maruti, Eicher Motors, and I think even Tata Motors, on significant amount of dips, at least a 5 to 10% dip, from their current levels. I think that should be good enough opportunity where you can start buying these names and then use any kind of a major corrections as good averaging opportunity. So it's a good sector. Long term wise, looks attractive, but then the prices on the short term charts may not be very attractive.
Right, Kunal. I think what you're saying makes a lot of sense. JK Tyre, for example, has gone from 80 rupees to 130 rupees in the last 3 trading sessions. SEAT, very big gains. Apollo Tyre, very big gains. And then Tata Motors. Of course, it was the last one to really rally. And I think that, fag end of it might be playing out now. But Vikas, would you agree with Kunal then? Should investors wait for a sizable correction or take a longer term view and invest now?
Yeah, my views would be something similar to Kunal's. I think we've seen a pretty strong rally in most of the auto stocks. Look at Tata Motors, it has gone up 50% in the last 1 month or so. Even Ashok Leyland is doing well, and then other stocks like Maruti or a Hero MotoCorp or a Bajaj Auto, they've all done well. And even auto auxiliary stocks, like as you were rightly pointing out, JK Tyre has done well, and in line with it, most of the tire stocks have also gone up, battery stocks have gone up, auto component companies have gone up. I think it would be time to wait for these stocks to correct and then start buying into the stock. Although the sector looks bullish, but then since the run-up has been heavy, I think we could see some correction ahead. So correction would be a good opportunity to enter into these stocks.
Both our experts warn that a correction might be there in the near term for auto stocks. So be careful, wait for that, and then you can enter because long term looks good. Thank you to both of you for joining in on BNSN. Great to get perspective as always. We're now going to be joined by a very special management, Jonathan Hunt, who's the MD at Sinjin International. Good morning, sir. Thank you for taking out the time to talk to us. Of course, your company's been one of the best performing over the last year. But could you walk us through the most recent quarter? And could you say how it's fared against the previous one sequentially, given the disruptions that we've heard about in your specific verticals? Also, based on the commentary, it seems that top-line growth was driven by discovery services and dedicated centers. So going forward, is that going to be the driver, or are there something new that you're looking at?
I think you captured it. Very happy with the performance for the quarter. I think it's really shown a lot of resilience pretty much throughout the year. Everybody was challenged back in the first quarter. I think Sinjin's really coped with that very, very well. I'm very proud of some of the work that we've done around keeping our staff safe and to keep our operations at pretty much 100% throughout the year, certainly through the quarter. So happy with the financial performance. We predicted that we would bounce back after that first quarter and we would see sequential growth through the year and that growth accelerating. And that's exactly what's happened. Pretty happy with the sort of cost control in the business. So the profit performance has been pretty good as well. And that sets us up, I think, with a very busy final quarter of the year. But if we can deliver that busy fourth quarter, I think we'll be there or thereabouts on our guidance for the full year.
All right, thanks for that. So, could we talk about a recent collaboration you've had with Deerfield Discovery and Development? Now, significant contribution coming in from there this time around versus what we've seen in the past. What are you penciling in from here on out?
Yeah, I think that's quite an exciting business model. Great to have a sort of landmark partner in Deerfield joining us on that. But it's really about bringing innovation and accelerating it. So our ability to do all of the stages of the discovery into development sort of process and bring those all together under our management and work collaboratively with a partner is really what sets that apart. And you know that they're moving pretty quickly. So we've gone from signing that to actually getting the first four projects up and running. And for them, we are becoming the sort of research heartbeat of their organization. And it's a really, quite an exciting partnership. It'll take a while, as you know, research in science takes years to discover, to develop, and to bring new medicines through. And we look forward to having that long-term partnership with them.
By when do you expect the Mangalore API facility to start contributing towards your financials? And what is the status on that front overall, if you could shed some light?
Again, we're very confident that the long-term prospects for that business and for the investment we've made in Mangalore continue to look positive. But it is a long-term plan. I mean, you build manufacturing sites like that with an understanding that the asset has a 20, 30-year life. So, you don't really judge them over the first weeks and months of their existence. Pretty much what we'd said for this year, it was about qualification, about really testing the systems there, making sure that we've built it right and that it's got all the qualifications it needs. That process should start to come to an end in this final quarter. And then it moves as it goes into the next financial year, into that beginning of a commercial operating plan. But it'll take us a number of years to really build that to full capacity. So I think it'll be a gradual long-term glide path, but a good opportunity for us and an asset that'll create value over many, many years to come.
Can you talk to us a bit about the contribution of Remdesivir and other COVID-related business in quarter gone by?
Yeah, I mean, the first thing I'd say is I think, the whole industry, the life sciences industry worldwide has reacted to the pandemic in a way I think in hindsight we're going to be very proud of. The speed at which people have come together scientifically to collaborate and do what I think is the right thing. So our motivation throughout this with a lot of the COVID research has really been to combat the disease. It's not done primarily as a commercial venture, as a business driver. We were looking very much to contribute where we could to enable others. We've done a lot of work in terms of elucidating the spike proteins very early on. That's one of the things that you need at the beginning of the discovery process to start enabling the discovery and development of vaccines. And then we're very proud of some of the CSR activities we've done to test people, really to keep the communities we live in safe. We're on to almost 100,000 people that have now had a COVID test from Sinjin. The vast majority of those were done on a not-for-profit free basis. Many of them were also employees as well. So I don't see it necessarily as a business driver, but I do see it as a societal necessity.
Right, sir. So finally from us this morning, two pieces of guidance we need from you. Firstly, could you leave us with some expectations for this year and next? And are the current EBITDA margins sustainable going forward, or might they taper off in the near term?
Yeah, well, it really goes back to the comment I made earlier. We're tracking well. We delivered on our guidance this quarter. We're tracking well for our full year guidance. That implies, some continuation of growth into the fourth quarter, and it implies good margin structure. We have a very good margin performance through this year, and we're getting better at becoming more efficient and managing costs. So I think that looks healthy. As for the outlook for the new financial year, we'll cover that at the full year results in April.
All right, well, thank you so much for taking out the time to talk to us this morning. That was Mr. Jonathan Hunt, the MD at Sinjin International, talking about the latest in the quarter that just went by. Time for a very quick break on Buy Now, Sell Now. Stay with us. We'll be back in just a minute. Hi, and welcome back to Buy Now, Sell Now here. You're watching ET Now. Of course, Bajaj Auto delivered some stellar earnings recently. The stock is the top performer on the Nifty today. It was up as much as 9 or 10% earlier this morning. And the revenues really grew well, 17%. Profitability even greater, 24%. EBITDA margins were up and by 200 basis points to 19.4%, and absolute EBITDA was up around 27%. So that's a clear sign that autos on the rebound when Bajaj Auto posts these kind of numbers, and of course it's got the brokerage community very excited. So this morning you have Jefferies coming in, maintaining a buy, and their target is being elevated by around 100 rupees to 4,300 versus 4,200. They're optimistic on a few things, particularly the export demand recovery. That's something they're flagging off. Second, market share gains within export, right? They, however, are slightly cautious on the sustainability of the domestic demand. So overseas looking good, domestic they're not yet too sure. Higher metal prices are, of course, going to hurt your margins a little bit, but then there'll be a pass-through effect later. And then you also have to remember the valuations right now for Bajaj Auto at 16 times FY23 are fairly reasonable compared to some of the other valuations we're seeing. So Jeffrey, fairly bullish on it. In light of that very good result earlier this morning, we actually caught up with the management, Rakesh Sharma, who's the ED at Bajaj Auto. Let's get you a slice of that conversation.
We do expect interruptions will continue for another 3 to 4 months because a lot of the container traffic is getting sucked in by the China-US, China-Europe routes, which are offering very lucrative freights. In domestic, the key highlights are the remarkable performance of the Pulsar 125 as well as the super premium end of KTMs and Dominars. These, of course, on a volumetric basis are a small proportion, but Pulsar 125 is a significant proportion now of Bajaj Auto. This has significantly lifted the financial performance of the motorcycle business unit during the quarter. Domestic motorcycles are now running at almost equal to last year retails. However, you will see some very high growth numbers in quarter 4 for the industry and for us, but that is due to the base effect of a very low quarter 4 last year because the industry and all the companies were preparing for the BS6 transition. My own view is that if I take a sweep, zoom out and take a sweep of last 5 years and see how Q4 responds, how Q4 follows Q3, and using that information sanitize the Q4 last year of the base effect, then I would say we are at low single-digit growth in demand. We hope to keep a pace a bit faster than the industry, but for us, most important thing is to continue to maintain the structure of our portfolio in terms of the mix. And 125cc as well as the super premium segment will be the key drivers for us.
Okay, let's keep it with Motown and also address another automotive heavyweight. I'm talking about Hero MotoCorp. The stock is flying in trade, up almost 6%. The company also recently breached the 100 million production mark. And on that occasion, we spoke to the management of Hero MotoCorp, Mr. Pawan Munjal, a very rare voice that ever comes on any media, has spoken to ET Now exclusively. He talked about the company's journey, growth post-COVID-19, premiumization of bikes, partnership with Harley, GST cuts, and lots more. Here's an excerpt. Listen in.
Pent-up demand was one of the reasons why customers were coming in. But we have had new customers coming in. We have customers coming in for the reason of not going into public transport, not going into cabs, sharing cabs, not doing ride sharing, wanting personal mobility for themselves. All that has added to the number of customers coming in. And going forward, I believe we will definitely have customers, replacement customers coming in, new customers coming in, and the fact that even now, people still want personal mobility.
while you're talking about personal mobility, talk to us about, the year 2020. We also saw Hero getting into an agreement with Harley as well. This is something that a lot has been talked and written about. Talk to us about what does this partnership really mean and what kind of integration will we really see in the future as well?
We are here today for a historic event that Hero has just shown to the entire world. And I'd like to focus on that historic event. Let me just say, on the partnership of Hero and Harley, it is a great partnership for both Hero and Harley going forward. The fact that Hero is moving towards premiumization of its products. We have introduced recently a lot of premium products in our portfolio, and going forward we will continue to do that. This entire partnership, Hero and Harley, is definitely...
Okay, well, today is definitely all about auto, and the auto stocks are just doing so well, completely bucking the trend. The rest of the markets, broader or headlines, are under significant pressure. Let's address the BNSN quiz question because it's 11:48. My question to you was, which one of these sub-segments contributes the most to the cement industry, right? So your options are low-cost housing, commercial and industrial capex, rural housing, or then lastly, infrastructure. The correct answer today was rural housing, which is C. And one of those few rare days where nobody got this question correct. We had quite a few participants, but nobody guessed that rural housing would be the largest contributor. So I guess you'll have to come back next time. Better luck to you all. We'll do one thing. Let's just take a quick break and be back in just a minute.
You're still watching Buy Now, Sell Now. Markets, meanwhile, continue to languish. 14,500 for the Nifty 50 index. SENSEX continues to log in losses in the excess of about 0.5%. Mid-cap index once again has recovered and is back in the green, though it's largely flattish right now. There's only FMCG, IT and auto pack which is managing to gain in trade. With that, we're timed out on this edition of Buy Now, Sell Now. So I'm going to wrap it up right here. Thank you for watching.